Now, it's my privilege to invite our special guest, Shri Rama Mohan Rao Amara, Managing Director, State Bank of India, for his speech. Welcome, sir.
Respected Sri Ajay Kumar ji, CGM Aditya Gaya, my colleagues Ravi Ranjan, Samir Sani, Srinivas Panigrahi, Mr. Singwani, and other FEDAI members, including some officials from IIBF, and all the FEDAI members as well as distinguished guests. A good evening to all of you. So it's indeed a privilege to deliver a keynote address, particularly on 8th annual day of FEDAI. In fact, I was interacting with my colleagues to understand, in my knowledge, FEDAI has been quite old. I mean, I remember my days when I worked in a foreign exchange division. FEDAI was always there. I mean, FEDAI manuals used to be there. So how is that it is the 8th annual day? So they did give some background to it, saying well, always these conferences are held off-site. But since 2016 onwards, I think perhaps they have started this annual day kind of event, which provides a wonderful forum to all of you to network, etc. So again, my congratulations to FEDAI on the 8th annual day. I think briefly, Samir has touched upon the important role being played by FEDAI. I completely agree. I also talked about the existence of this FEDAI for the last 70 years. Particularly along with the regulator, as a kind of SRO, FEDAI has been doing wonderful activity. It has been critical in ensuring the smooth functioning and development of Indian forex markets since its inception in 1958. So I believe I speak for the entire forex community when I say the members of the FEDAI have been doing a wonderful job. I think all of you deserve one round of applause. I think you can applaud for yourself for the contribution what you are making to the forex markets. Coming to the theme, today's theme, which says navigating the global economy, opportunities and challenges for India, given the kind of chaotic external environment what we are seeing, to some extent it has been alluded by Mr. Gaya also, so many statements in the beginning and the end of the day. Again, particularly Samir was talking about, the morning statement can be reversed by evening. So it has been so fluctuating and so volatile. It is, I think, this forum offers a wonderful opportunity to have a kind of open-minded thinking about what are the challenges and opportunities. I will dwell on 4 or 5 broad themes around that. I will touch upon the global landscape, headwinds, and shifting axis. So the International Monetary Fund, in its July 25 update, forecasts global GDP growth at 3% in 2025. In fact, maybe a few weeks back, it was 2.8 or so. They again revised it upwards by 20 basis points, seeing some stability. But again, perhaps they did not factor the recent, the flurry of tariff-related announcements. So, but at least as on date, official announcement from IMF is 3% kind of global growth, which itself is less than last 5 years kind of growth for the world, particularly post-pandemic. The biggest concerns currently are the trade tariffs imposed by US and their key impact on economies around the world. A number of trade deals have been signed in the recent days, reducing the level of uncertainty. But for India and for some other major economies, the uncertainty continues, right? There are some deals being struck, but still, for a few countries, the negotiations are still underway. Even for countries which have done the trade deals, its impact on their domestic economies remains a matter of analysis and speculation. US Fed has cited uncertain impact of tariff on US prices and its labor market as a reason to hold off from cutting the interest rates. In the last few years, we have been reminded multiple times in the last few years that global trade and businesses abhor uncertainty, which can have a paralyzing impact on their functioning and often leads to supply chains getting disrupted, leading to inflationary episodes. US dollars saw a large bout of depreciation this year, led by these concerns and their likely effect on the US economy. In combination with the increased tariffs, a weaker US dollar will put additional pressure on countries dependent on exports to the US to stay competitive. The next few years are likely to see a realignment of global supply chains as well as trade relations between the countries. Whether this will lead to more beggar thy neighbor policies by countries desperate to stay competitive, or will we see the emergence of new trading blocs and import promotion by other large economies, it remains to be seen. Let's look at India's economic trajectory, optimism, and resilience. India's inability to grow into a export powerhouse, I will say global export powerhouse, and continued dependence on domestic demand for growth has suddenly provided us an advantage in terms of the likely impact from the trade disruptions. This does not mean we should not continue to try grow our exports. A number of efforts that the country has made in recent years have been towards becoming a part of the changing global value chains. The Make in India initiatives, production-linked incentive schemes, what we call PLI schemes, new bilateral trade agreements with countries like UK, UAE, and Australia, and efforts to improve competitiveness of Indian corporates have all been the efforts towards garnering a larger share of global supply chains. China's export-led growth model is reaching its limitations, a fact recognized by Chinese authorities as well, who have once again announced intentions to promote domestic demand growth. This provides Indian exporters a unique opportunity to increase their share of global trade and over the next decade, make India the manufacturing hub for the world. The famous quote attributed to Mark Twain, "History does not repeat, but it often rhymes," is very apt here. With the rapidly changing attitudes, especially in the US, towards globalization and global trade, the future is likely to be different in the sense that we don't necessarily need to become the next China, but we can chart our own growth story. With our strength in services, large young population, one of the world's best digital infrastructures, and well-regulated and developed financial markets, there is no reason to doubt that we can make it rhyme. India is well placed to substantially increase its role in global trade over the next decade, no matter the various short-term challenges we may face along the way. India's macroeconomic fundamentals also remain robust. A few points just I want to share with all of you. CPI inflation moderated to 2.1% in June 25 and is likely to remain low till at least Q3. RBI has also revised its inflation forecast for FY26 down to 3.1% from 3.7%. Foreign exchange reserves stand at USD 688.9 billion, providing a healthy cushion for any short-term market impact from trade disruptions and a 11-month merchandise import cover. Current account deficit in FY25 was at a comfortable 0.6% of GDP, down from 0.7% in the previous year. India's services exports, particularly in IT, consulting, and fintechs, touched an all-time high of USD 387 billion in FY25, providing the much-needed cushion in terms of addressing the deficit on the merchandise side. So on the merchandise trade front, things are less exciting. Last year, our merchandise trade deficit grew to $283 billion, while exports growth was flat. This year has started on a positive note, but the goods export scenario remains uncertain given the tariff-related uncertainty. The government has been trying to address the competitiveness issues faced by Indian manufacturers, like high logistics costs. The Eastern Dedicated Freight Corridor, DFC, is functional, while the Western Corridor is likely to be completed this year. Additionally, the India-Middle East-Europe Economic Corridor, IMEEC, and the development of multimodal connectivity infrastructure under the PM Gati Shakti mission offer long-term trade competitiveness. We are also closing in on a trade deal with the EU, which will be a big positive. Of course, just I'm touching upon the recent developments. We have seen the announcements from US imposing a tariff of 25% initially, then again additional tariff of 25%, making it overall 50% as on date. I may be dated by the time I finish the speech with the kind of rapid changes that are happening to the announcements from US. As far as sectors are concerned, for now, the pharma sector and electronic exports, they account for around $25 billion of exports from India. They seem to be a kind of given a carve-out by US so far, but it is left to, again, interpretations. This also gives an opportunity for India to diversify its export destinations and increase the pace of reforms to increase its export competitiveness. I will briefly touch upon the key government and regulatory policy highlights. The Indian government has been actively implementing a range of policies and initiatives with a strong focus on achieving the vision of Vikasit Bharat, that is developed India, by 2047. These policies cut across various sectors and aim to drive economic growth, foster social development, and leverage technology for progress. Make in India PLI schemes, we have seen the schemes encouraging domestic manufacturing, reduce reliance on imports, and attract foreign investment, creating jobs and strengthening industrial output. We have already seen the success of PLI in the case of mobile manufacturing, which led to a 10 times jump in India's mobile exports, at least in the last 6 years. Similarly, we have seen a 20-time jump in solar cell and module exports. So with the signing of these trade agreements, we are likely to see more export success stories from the PLI sectors. Ease of doing business, to streamline the regulations, I think which even for kind of dealers and the banks, regulated entities also, he talked about ease of doing business. So here I'm talking about ease of doing business for the investors and the industry. So to streamline regulations, reduce bureaucracy, and improve the overall business environment for attracting investors and boosting entrepreneurial activity, I think government has been focusing on ease of doing business a lot. All of you are aware the number of initiatives around Startup India and various schemes meant for supporting MSMEs, a couple of schemes like Udyami Bharat scheme and enhanced credit guarantee fund that provide necessary and timely support to micro, small and medium enterprises. They have come a long way and they have really supported the growth of MSMEs. PM Gati Shakti National Master Plan. This integrated platform aims to ensure efficient planning and execution of infrastructure projects by bringing together various ministries and departments on a single digital interface. Lastly, under this theme, I'm just covering the National Logistics Policy, which was launched in 2022 and which focuses on creating an integrated, efficient and cost-effective logistics network, aiming to reduce logistics costs and improve India's logistics performance index ranking. In international shipping, India's rank has already improved to 22nd globally, while overall rank has improved to 38th. Now, Indian ports turnaround time is 0.9 days, and it is much better than that of most developed countries like US, Australia, and Germany. Similarly, there are a number of other initiatives like Bharatmala Pariyojana, the India AI mission, the BharatNet project, etc. I'm not going into the details, but all these initiatives are aimed at increasing India's competitiveness, which will also attract global investments. India's regulators such as RBI and SEBI are also playing very active, crucial roles in strengthening and enhancing the Indian financial markets. Their efforts collectively contribute to stability, transparency, investor confidence, and the overall development of the financial ecosystem, which remains a major strength amidst comparable economies. Let me touch upon a few of the RBI's initiatives. Expansion of digital payments. The RBI continues to promote the adoption of digital payments, working with various stakeholders like the National Payment Corporation of India, NPCI, and IBA. UPI continues to be driving force, handling over 24.03 lakh crore in payments in June 2025 alone, accounting for nearly 85% of all digital transactions in India. I think we have seen month-on-month data. I think the July figures are also out. The July data is much better than the June data. Central Bank Digital Currency, CBDC. RBI is expanding the use cases for CBDC and has introduced cross-border pilots. This technology has the potential to disrupt the current cross-border payment mechanisms. Enhancing security and combating the fraud. To combat the increasing trend of digital payment frauds, RBI is collaborating with banks to develop a digital payment intelligence platform, what we call DPIP. And these initiatives like DPIP and multi-factor authentication, card tokenization, zero liability for customers in certain cases, and promoting awareness about legitimate banking websites are all the steps where India is among the global leaders, with other countries often learning from our experiences. Unified regulatory framework for forex markets, I think briefly touched upon by Mr. Gaya as well. The harmonized rules across OTC and exchange-traded forex products, to deepen market liquidity and innovation, they go a long way in strengthening the markets. Of course, all of us are aware some of the schemes like a fully accessible route has been instrumental in deepening the Indian government bond market and integrating it with the global financial system. Liberalized remittances scheme, LRS, enhancements and rationalization of the TCS have made the retail forex flows more transparent and efficient. So what is especially commendable is that in most of these initiatives, RBI is playing the role of a leader or even a pioneer, setting examples for other countries to follow and ensuring that Indian financial systems are at a cutting edge. So these developments inject a significant level of efficiency into economic transactions, aiding in improving the growth momentum of the economy. So today's challenge can be tomorrow's glory. Under this theme, just I want to say a couple of points. While talking about the significant milestone that we have achieved and the tremendous potential that our country has, we should not forget to mention the challenges. I would like to quote Rabindranath Tagore in this context, who said, "You can't cross the sea merely by standing and staring at the water." Right? So as I mentioned earlier, for India, there are several challenges from infrastructure deficits to geopolitical challenges and to trade issues, but we need to turn these doubts into realizations of tomorrow. Some of the areas which we need to look at is continuing the policy reforms. Reforms focused on improving the ease of doing business and attracting investments have come a long way, but we need to continue to pursue these on a continued basis. These cannot be seen only as once-a-decade reforms or as a response to crisis, but all stakeholders need to work on these on a daily basis for India to achieve its potential. Invest in the infrastructure and human capital. Continue to strengthen infrastructure and also invest in skill development that will boost productivity and competitiveness. And in this context, I would like to appreciate the excellent job being done in capacity building by FEDAI. Continue those efforts. Promote experts and participate in global value chains. Continue to expand exports and actively engage in global value chains and fight challenges by addressing our weaknesses and working on our strengths. Embrace technological advancements. Harnessing the potential of the digital economy and adopting cutting-edge technologies will drive innovation and economic growth. No major economy in the last century has reached developed status without leading in some major cutting-edge industry. India will also have to look for the same. In fact, Mr. Gaya has talked about product development, right? That is one area where we need to really work on. Prioritize sustainability and climate resilience. Ensuring long-term growth and well-being requires prioritizing sustainability and climate resilience. Given the threats to climate and India's large population, sustainable development is an imperative and can also be an area where we can become leaders. So, to conclude, the story of India's rise in the global economy cannot be just one of scale alone, but it should be of resilience, reform, and reinvention. There has never been any doubt about India's potential, but as we look ahead to 2026 and beyond, our collective challenge is to convert this potential into sustainable prosperity, not just for the financial system, but for every Indian, every exporter, importer, entrepreneur, and citizen. Finally, I once again thank FEDAI for inviting me. Have a very enjoyable evening. Thank you. Thank you all.